Korean stocks up 75% in less than 5 months this year? It sounds wild, I know. The Kospi index, South Korea's benchmark, has not just surged, it's nearly tripled over the last 52 weeks as of May 6, 2026. Forget the S&P 500's performance, we're talking about an entire country's market in overdrive. What exactly drove this explosive growth? And more importantly, what can we learn from a market that makes a 100% gain in a year look almost conservative? We'll dive into the specifics, like why Samsung Electronics just hit a $1 trillion market cap for the first time, and what this means for investors looking at international diversification. Alright, let's talk about something that's probably making some investors incredibly happy right now. South Korean stocks. I mean, when was the last time you heard about a major market jumping 75% in less than 5 months? Because that's exactly what the Kospi index has done as of May 6, 2026. This isn't just a small bounce, we're talking about a market that has nearly tripled over the last 52 weeks. To put that in perspective, imagine if you'd put $10,000 into a broad Kospi tracking ETF a year ago. Today, that investment would be sitting closer to $30,000. And it's not just the index itself. On May 6, 2026, Samsung Electronics, a behemoth in the tech world, officially hit a $1 trillion market value for the very first time, largely fueled by the massive AI chip boom. So, what exactly is driving this insane rally? And more importantly, what can we learn from a market moving this aggressively, this quickly? Because while it might feel like this is happening overseas, the lessons here about market dynamics, investor sentiment, and global economic forces are directly applicable to anyone navigating their own investment journey, no matter where they live. We're going to dive into the specific catalysts, look at how Goldman Sachs research actually predicted much of this despite a previous downturn, and break down what this kind of explosive growth can mean for someone building their long-term financial strategy. The lesson here is that understanding why markets move can be far more valuable than just knowing that they moved. What exactly was driving this unprecedented rally? Let's zoom in on the numbers that really grabbed headlines. As of May 6, 2026, the Kospi index was up a staggering 75% year-to-date. Think about that. Less than 5 months into the year, and an entire national market had soared 3/4 higher. Looking back even further, over the 52 weeks leading up to that same date, the Kospi had nearly tripled. This wasn't a flash in the pan, it was sustained, rapid growth that analysts were scrambling to understand. We saw days where the market just kept going. For instance, on May 27, 2026, the Kospi index surged to 8,422 points, marking a 4.65% gain in a single session. To put that in perspective, imagine your S&P 500 fund jumping nearly 5% in one day. It really highlighted the intensity of the buying pressure. Bloomberg's Sang-mi Cha captured the sentiment perfectly in May 2026, describing the South Korean market as hotter than ever, and on track to easily surpass previous world-beating performances. A major driver behind this surge was the incredible performance of tech giants like Samsung Electronics and SK Hynix, fueled by a booming demand for high-bandwidth memory, or HBM chips, crucial for AI. Samsung, for example, saw its market value top $1 trillion for the first time on May 6, 2026. The lesson here is that focused growth in key sectors, especially those tied to global megatrends like AI, can have an outsized impact on a national index. Now, as we look at how the market continued to react, even the big players like Goldman Sachs started to shift their tune. Now, this kind of explosive growth inevitably makes the big banks take notice. On March 13, 2026, even after the Kospi had fallen as much as 20% from its February 26 high, including a sharp 12% decline on March 4 alone, Goldman Sachs research was already forecasting a recovery. They initially raised their year-end 2026 Kospi target to 7,000 from a previous 6,400, signaling confidence despite the recent dip. This wasn't just a small adjustment, it was Goldman effectively saying, even after this pullback, we see new record highs on the horizon for Korean stocks. But things accelerated much faster than even they predicted. By May 21, 2026, barely 2 months later, Goldman Sachs had to significantly upgrade its outlook again. They lifted their 12-month Kospi target all the way to 9,000. Think about that. From a 7,000 target in March, indicating recovery, to a 9,000 target just weeks later, underscoring a growing conviction in the market's sustained upward trajectory. This wasn't just optimism, it was an acknowledgement that the fundamentals supporting Korean stocks were strengthening at an incredible pace. The lesson here is that even major research institutions can be surprised by the speed and magnitude of market movements. While they had a bullish tilt early on, the market's performance pushed them to re-evaluate and raise their expectations considerably. This shift from caution to such a significantly bullish record highlights the dynamic nature of financial markets and how quickly sentiment can turn. This incredible rally didn't happen in a vacuum, though. A major driver was the incredible performance of Korea's tech titans. A major catalyst for this explosive surge was undeniably the AI chip boom, directly funneling massive gains into South Korea's tech sector. Think about this. On May 6, 2026, Samsung Electronics, the nation's crown jewel, reached an absolutely unprecedented $1 trillion market valuation for the very first time. Financial analysts like Huiling Tan, reporting for Reuters on that landmark day, noted Samsung's stock closed a staggering 14.4% higher on that Wednesday alone, having more than doubled its value year-to-date, specifically a 112% increase from January. This isn't just a win for one company. It coincided with the Kospi index itself being up 6% that specific Wednesday and a stunning 75% year-to-date, reflecting broad market optimism. This $1 trillion milestone for Samsung isn't just a big number, it solidified its position as only the second Asian company to ever achieve this, following Taiwan's semiconductor manufacturing company, TSMC, which crossed the threshold in late 2025. The primary driving force? Surging global demand for AI memory chips, particularly high-bandwidth memory, HBM. Samsung, a global leader in HBM3 and the upcoming HBM4, was perfectly positioned to capitalize on this, supplying memory solutions to major AI accelerators like NVIDIA's Blackwell series. The performance of tech giants like Samsung was absolutely integral to the broader market's exceptional gains, underscoring just how much influence the semiconductor and AI sectors hold, directly contributing over 30% of the Kospi's year-to-date growth. The lesson here is that focused innovation in a high-demand sector can have an outsized impact on an entire national economy and its stock market. Now, while this tech boom was certainly a primary engine, it wasn't the only force at play. Understanding the broader macroeconomic tailwind is crucial. But it wasn't just about individual company stories, a massive macroeconomic tailwind was propelling the entire market. For instance, the Bank of Korea, or BOK, played a crucial role. In April 2026, the BOK held its policy interest rate steady at 2.5% for the seventh consecutive meeting, exactly as market watchers expected. This stability was a huge deal. It created a predictable and supportive backdrop for equity markets, lowering uncertainty for investors who could then plan with greater confidence. This consistent, low-rate environment helped fuel the Kospi's robust performance. We saw monthly observations for share prices, measured as an index with 2015 is equal to 100, consistently showing strong upward momentum. It wasn't just a flash in the pan, it was sustained growth. While we don't have the granular export numbers for that exact period, the market's performance, surging nearly 90% in 2026 according to Barron's on May 15, strongly suggested a thriving underlying economic environment. This fosters exactly the kind of investor confidence that makes big institutions like Goldman Sachs raise their targets, as they did to 9,000 for the Kospi on May 21, 2026. The lesson here is that stable monetary policy, even if not explicitly expansionary, can significantly de-risk equity markets and allow other growth drivers, like the AI chip boom, to truly flourish. What this means for someone looking at international markets is that understanding the central bank's stance and its historical actions is just as crucial as analyzing individual company fundamentals. It's about building a complete picture. What this means. Investment implications and future outlook. So, what does all of this mean for someone watching the market? The 2026 surge in Korean stocks provides a compelling case study on how rapidly market sentiment and valuations can shift in response to technological trends and expert forecasts. As of May 6, 2026, the Kospi had already surged 75% year-to-date, putting it on track to surpass its world-beating 76% gain from 2025. Over the 52 weeks leading up to that date, the index had nearly tripled, a stunning demonstration of wealth creation. This kind of explosive performance underscores the potential for significant returns in emerging, yet technologically advanced, markets. Consider how institutional confidence followed this trend. On May 21, 2026, Goldman Sachs Research, specifically analysts like Kevin O and Joanna Lee, actually increased its 12-month Kospi target to 9,000, up from a previous 8,000. This represented a strong belief in continued upside potential, even after the market had already moved so dramatically, signaling a consensus that the growth was sustainable rather than speculative. The robust growth, particularly driven by sectors like advanced AI chips and next-generation battery technology, with companies like Samsung Electronics reaching $1 trillion valuation on May 6, 2026, fueled by its leadership in HBM memory, suggests the critical importance of identifying and investing in innovation-led industries. Furthermore, the stability provided by the Bank of Korea's consistent interest rate policy, holding steady at 2.5% for 7 straight meetings into April 2026 under Governor Ri Chang-yong, illustrates the critical role macroeconomic stability plays in fueling prolonged market rallies. This stability provided a solid foundation, allowing investors to focus on fundamental growth drivers rather than currency or inflation risks. The lesson here is that a powerful combination of technological disruption and supportive economic policy can create truly powerful market tailwinds. So, the story of Korean stocks in 2026 isn't just about a single-year explosion, it's a powerful lesson in how the right confluence of innovation, precise analyst forecasts, and disciplined macroeconomic stability can create truly exceptional market performance. From the AI chip boom propelling Samsung to a $1 trillion valuation on May 6, 2026, to the Bank of Korea's steady 2.5% interest rate, every piece played a role. The lesson here is that understanding these interconnected forces, technology, expert sentiment, and central bank policy, is absolutely critical for anyone looking at global markets, especially when you see the Kospi nearly tripling over the 52 weeks leading up to May 6, 2026. Now, for you, have you ever seen a market surge this dramatically in such a short period, especially driven by a specific technological shift like AI? Share your observations or experiences in the comments below. And if you want to keep breaking down complex market events like this with data and real-world examples, make sure you hit that subscribe button. You don't want to miss our next deep dive. If you found this case study fascinating, my breakdown of how the 2020 COVID crash actually set the stage for specific tech stock gains is exactly the next thing you should watch.